And welcome to this very interesting session about cryptos today. And this is along with WazirX team, and I'm very happy to host Rohit from Clear as well as Aritra from WazirX. Guys, please introduce yourself. Rohit, do you want to go first?
Sure. Hi, everybody. Great to be here to discuss this rather timely and exciting topic. My name is Rohit. I look at business for ClearTax, I find myself to be a deep crypto enthusiast as well as finance enthusiast in addition to, I would say, kind of professional interest in taxation. So happy to discuss this topic along with Aritra and Preeti.
Sure.
Okay. So I think I should not introduce myself. I just listen to both of you. I'll have questions and taxes myself on the behalf of the exchange side. But guys, for those who don't know me, I'm Aritra. I lead the
Aritra, isn't there some issue with your sound?
I'm hearing an echo.
Yeah. Uh, Let me try and mute myself.
Hello? Hello? Okay. Is that okay? Yeah. Is that okay with both of you? Everybody here?
Yeah, just go ahead.
Oh, cool. Perfect. See, we are talking about challenges in taxation. There are tech challenges. On Twitter, you have Twitter Spaces challenges. Here, we have these kind of challenges. But okay, I currently in my role, I head the public policy and government affairs for one of the largest exchanges in India, which is WazirX. It's a buy and hold company. And today, honestly, when these folks reached out to us, I'm like, this is the need of the hour in terms of talking about what is happening around taxation. But more than talking and speaking, I think we ourselves have a lot of questions within us, like in terms of the fine print of the finance bill which came out. But happy to discuss and share more with everybody.
Okay, thanks a lot, Aritra. Although we missed quite a bit of it because for some reason we are not able to hear you very properly. Maybe there's some sound issues. So I'm going to come back to you in just a minute while you figure this out. And I'm going to take a minute to just sort of elaborate on the topic. Today we are all meeting here to talk about what happened on 1st February. Big surprise. The finance minister said that finally it's time to tax gains made from selling cryptocurrencies. Now there was a lot of excitement and also a lot of fear and lack of understanding, and that's what we are going to do today. We will remove all the misunderstandings and all the gray areas of whatever we understand from the law and whatever we the manner in which we interpret it. Of course, there are a couple of things that during our discussion we will share with the audience about these are the various aspects which perhaps will require a lot more clarity from the government. So to begin with, there was a not a new crypto tax bill or a crypto bill, but a couple of sections introduced in the Income Tax Act, which finally address the issues around crypto taxes. The government has gone ahead and defined cryptos as virtual digital assets, and it's a very interesting definition because it appears to be very, very inclusive, which means that it may likely cover a lot of digital assets, which may be in the nature of a token, or it will also include NFTs. And the definition also gives powers to the central government to notify certain currencies as cryptocurrencies, and also to denotify. So if they feel that a certain currency should not be treated as a virtual digital asset, they may choose to denotify it. So in that sense, a lot of powers to the government, but finally some understanding around cryptocurrencies. Rohit, would you like to just add to that, please?
Sure, Preeti. So I think yes, you're right that I don't think too many people were expecting this on the first. People are still in the old income tax and what will be ATC deductions and all of those, and this came as a little bit of a surprise. But I think fundamentally, as I see it, it's a big. It feels like a monumental forward step, right? I think it's a first step. There are a lot of things that will probably change as things go along, but as we were talking with Aritra before the session, right? I mean, it's a big step from just a few years back when government and Supreme Court were kind of debating these things, and there was a 10-year potential prison sentence based on holding a single coin. So it's a big delta from that, right? And now I think from starting to define crypto, right? And they're taking a very fundamental approach here, right? Starting from what even is this, right? And as Preeti has mentioned in the past, right? It's given its own separate treatment, right? It is not in the income section. It is not in the asset section. It's a separate section. And so yeah, I think that is quite interesting. The second thing is that I think the kind of meta view I would take is that this is the broader digitization as a national priority, right? It's a logical extension of that, right? So when I kind of went through the text of the overall budget, right? I found that this budget itself was just so very technologically, it felt like, there's like discussion of drones, there's discussion of like digital education, there's a discussion about UPI and the next steps on UPI, right? So there's a discussion on credit going, digital and broad based, right? So in that sense, I think government stance seems to be that digitization is a national priority, and anything that can be digitized should be digitized, and anything that is getting digitized should have like certain framework around it, right? So in that sense, wild west won't continue for very long, right? So I think that's broadly a positive, because it takes the market deeper, it takes every asset deeper. And I think the other thing is that government is also, I think many of you guys are aware, right? Like in the from FY20 to FY22, right? Like or at least starting this 20 calendar year 20 to calendar year 22, they have taken the infrastructure investments from like 2.5 lakh crore to like 7.5 lakh crore, right? So like that 3x jump has to come from somewhere, right? So they're gonna, looks like they're gonna be a lot more pragmatic about all the economic activities in the country, and they are going to see wherever it is appropriate to extract taxation, right? So I think while this treatment is a little bit of a mixed bag, and we'll discuss more that today. I feel that government is at least being pragmatic about things, and I think that is kind of very positive. Now, the fact that they have not allowed any kind of offsets, right, like an equity kind of a treatment, they have not allowed any kind of indexation like an asset kind of treatment, and fundamentally the closest analog to this is like lottery winnings, or horse racing, or gambling. That tells you kind of where they stand today, right? But we should also be cognizant they're bringing out their own central bank currency and so on. So this space will evolve in my mind sharply, but it's very different than China. It is very different than the US, and India will form its own mind over a period of time.
Sure. Yeah, thanks, Rohit. And I totally agree with you that, it's really positive in the sense that now investors, if earlier they thought that they're getting into something, they were really unsure of how to pay their taxes, how to disclose this. And we're also hearing that the new income tax return forms will now likely include a column for reporting your crypto income. So I feel like that's really good progress from where we were a couple of months back. So, Aritra, I'm just coming to you on that. Like, especially when we talk about the way virtual digital assets have been defined, where they say generated through cryptographic means, they talk about, has digital representation, has inherent value, and, can be stored electronically. So, are you on the whole, do you feel this definition, meets the requirements, or would most currencies would fall into this unless they're specifically notified or denotified? Like, how would you interpret this, and are you happy with this kind of a definition?
The main question was the last question. Are you happy with the decision that has come? Okay, thanks guys for having me with you. First of all, I'll take a step back in terms of what both of you said. And this is an open thing to both of you and everybody who's hearing you wherever it's India or anywhere else. Listen, we have come a long way in India. We have come a long way in India. If you know the history of this. Right now, we are choosing to call it an asset, a commodity, a virtual asset. There's no word called crypto in the finance bill, by the way. To anybody else who's listening, they've never mentioned the word. Okay, so that's, I want to clear that first of all. But having said that, I still look at it firstly as a positive step. Look at where we have come from, right? 2018, before 2018 what was happening, right? There were exchanges which was just doing crypto to crypto transactions. They were just exchanges, and you also need to understand why we're still talking using the word exchanges, and you see a lot of exchange folks from exchanges like people like us going, because the majority of the liquidity in the country in crypto is still goes through crypto asset exchanges in this country, right?
Right.
Now 2018 we were banned, right? We were said there were also provisions for you going to jail for even having even a single crypto asset in your account, right? I don't know anybody has gone to jail for that and all of that, but from that to the Supreme Court hearing, which completely squashed what RBI had put up and all of that, and then eventually, slowly and gradually working with banks. So there are some issues with the banks that we work with, the entire industry has. To the fact that a department of the government during one of the most important days in the democracy of this in this democracy has mentioned that, hello, I'm not saying close down your thing, close down your business, this is illegal, this is wrong. The last 1.5 years, in fact 2 years, based, and this is my version of it, we've had a lot of stakeholder engagements. Meaning, what I mean by stakeholder engagement is people like us, we sat down, our founders, like Nischal, Siddharth, and other companies as well, all the other exchanges, all the other product companies. We sat down with each and every department of the government of India. I'm not saying it's been an extremely successful thing. We're in a absolute honeymoon period right now and all of that. They had questions, things like, I'll tell you where the conversation started, from the ban and the Supreme Court. How are you different from the stock exchange? How is a WazirX different from a national stock exchange, from a BSC? Huh? What is your tech different from that? What is block? Why do you need blockchain? Why do you need crypto at all in India? Kya zarurat hai? Kyun chahiye? They were legit questions asked to us, right? And then you had a joint parliamentary committee meeting. A public consultation happened with around, I don't know, I remember 15 or 16 odd of us. Finally, there is some sort of sense, and in a way it answers questions to a lot of people in India. Ki, boss, the government recognizes this industry. That was very important, right? For all this, while we are fighting on, boss, what is crypto? Legally, to koi definition hi nahi hai. What is virtual asset? There was no definition. But having said that, at the outset, taxation is good. Taxation is necessary. That's how governments work. Revenue generation is necessary. I'm using the word revenue generation because it's a very key aspect. Because we have consulted with various departments of the government. Now, this discussion is, whatever I'm going to tell you is not with regards to the crypto bill. Now, that's a separate beast altogether, which will come when it has to come this year at the session or through an ordinance. We don't know how that will happen. But we've had enough discussions on that. But as far as the taxation, I think it's a great step. But having said that, even if taxation is there, I think with due respect, certain provisions of what was mentioned in the fine print in the literature of the finance bill, it does sort of have a dampener on. We'll discuss the details of it, but sort of does a dampener on lot of aspects of the industry. One simple thing, I'm not saying it's wrong. No way I'm saying it's wrong. Like, look at it in terms of who is the user over here, who's the audience over here. This is very important. What's the age group of the audience over here? Now some people might question it also. Oh no, this is dangerous. How can people of 21 years of age trade? How can people of who earn less than 20,000 rupees per month, which is their monthly salary, can invest in such volatile aspects? Everything is, a lot of things in the stock market are volatile, a lot of things in the crypto market are volatile. But what has happened is, in the last 2 years specifically, because of COVID, of people having time at home and a lot of disposable income, I'm talking about a certain class, everybody started investing. Okay, one, in cryptos. B, and these are people who do not come from the 1% or the 2%. They come from, I'm defining people whose average ticket size investments are close to 1,000 rupees or 1,500 rupees or 2,000 rupees max to max, right? And there's another community whose source of revenue was things like airdrops in cryptos.
Sure.
Now, in all of these people will suddenly come under the 30% bracket. They are the day traders, right? So this will impact the day traders. And then there are other finer granularities of it, like the 1% TDS, which sort of impacts us. Now, great first step. We'll discuss further on this great first step, but there needs to be further deliberation. Why I say that? Not because of these two numbers that I'm pointing out. No, I'm sure there is enough. These are some of the smartest people who run the country, right? That's the reason they're there in Delhi. They're running the country. They've done this. But having said that, it does not embrace every part of this industry. This I have to say.
Right.
Right now, I understand most of it that you see in the fine print impacts the exchange part of the industry or the gifting part, right? If I gift a crypto to you, give a crypto to Rohit, right? But there are also larger companies, Web3 companies, who are pure play blockchain product companies who launch tokens in India. They get impacted suddenly, right? Because they were looking at it from a revenue perspective. So there's also a talk within the community of larger startups in India. Should we build the next stage of Web3 here, or should we register outside? Not my words. This is what the community is thinking. You don't
Sure.
want that to happen.
Right.
In your lifetime, we have seen a brain drain happening. So I'll leave it at that and we'll further discuss.
Yeah, I think thanks for sharing that. I think those are some wonderful aspects that you put across. Firstly, in the sense of youngsters getting into this product, and there are, I think, couple of things about youngsters who invest is that firstly, their appetite for risk is huge, and their desire for return also. They're looking at like phenomenal returns, and they're okay with volatility. They don't have too many funds to invest, but now it appears that no matter what your age is and how much you're earning, however big or small that is, you have to pay 30% tax on it. And of course, additional cess and surcharge. So that's what they've said. Now, before I go back to both of you, and we discuss this further about how this income will be taxed. Let's just try and understand exactly what the law says. So, the law says, or the finance bill, it's not a law right now until it's approved in the parliament, and we have it as the finance act. It's right now the finance bill, and couple of years back, and we've noticed this often actually, that sometimes there is an amendment that gets passed to the finance bill. So right now, this is just the bill, this is the proposed budget. So it says that whenever you make a transfer of a virtual digital asset for a consideration, is when your taxation incidents will happen. So there's going to be a tax incident, and when that happens, whatever gains you have, you are allowed to reduce the cost of acquisition. You're not allowed to deduct any expenses, and you're not allowed to reduce any losses. And also, when they talk about deduction, it means that you cannot claim any of the ATCs of the world and the Chapter 6A, where you have a deduction for health insurance, or whatever PPF or EPF you may be doing. So essentially, if you are somebody who invests into cryptos, and if this bill becomes a law, whatever gains you have, all you can do is reduce your cost of acquisition, and then you just pay 30% tax on it. And if you look at the law very very closely, it also means that you cannot claim the minimum exemption limit, which means that most of us are eligible to reduce 2.5 lakhs from our total income, because that's what the law is, that you're allowed a minimum exemption of 2.5 lakhs. But when you have income from cryptos, you're not allowed that 2.5 lakhs. So if you are a 16-year-old who has, say, a lakh income, just pure gains, not talking about losses, but if you have pure gains of rupees 1 lakh from cryptos, then you have to pay 30,000 plus 4% cess, and on your crypto gains as tax to the government. Now this means that these youngsters, and anybody and everybody who invests into cryptos, needs to be extremely mindful of the fact that firstly, there is no loss set off. So if just the plain reading of the law means that even if you have a crypto loss, so say if you had one bitcoin, and you had two bitcoins, one you sold at a profit and the other you sold at a loss, right now as the bill stands, it means that the losses you can completely forget about, but the gains, please come and pay 30% tax. So yeah, I mean, just kind of like, for a lot of people it may have come across as a shock, because not all of us have gains from lotteries. And as Rohit was mentioning, horse racing, we don't keep horses, many of us, luckily. But a much wider audience may actually have crypto income. So I think this could pinch a few of the investors. Aritra, how are you reading this particular provision of the law?
Okay, I have to be very careful when I say this because it's still a bill. But honestly, okay, I'll speak my heart out and based off, and this is just not me talking. This is the traders in India talking, whether they are small ticket investors and all of that. First, honestly, Rohit, Preeti, it does impact the day traders because one example, as I told you, the ticket sizes that I was taking, right? It does 30% is a huge thing for the day trader community in India on the crypto side, right? It's like it will stop a lot of them from doing it. for the time being at least. It'll happen. There will be people, if I'm really talking practically, for a moment as an individual, they will liquidate their positions. Ye hoga. That'll happen also. Practical things that'll happen, right? Then, pardon me. The other thing is, see, crypto is a global asset class and an investment product, right? The 30%, as I told you, will hamper wider adoption. Emerging techs like NFTs, DeFi, metaverse, they all built on these virtual assets. What I mean to, the reason I mentioned the last statement was, if any entry barrier and friction points are created to acquire these virtual assets, it will automatically have serious ramifications on the adoption and the proliferation of all this tech. That's very important to understand, because and I'll state this on record. Um I've gone through the. I mean, I'm sure you guys are experts. I'm not the expert, but I've gone through the literature myself of the bill. It does not encompass the entire gamut of what Web3 is, and that's a fact. And also, I don't. It's not a blame game, but also it's an emerging technology. To hope it'll happen. Now, point number two, it's very critical. Point number two. Now, well, profit from crypto trading will be taxed at 30%, as you clearly said. The other thing that bothers us is losses cannot be carried forward. like like any business or asset, the crypto industry also experiences, these bull runs and these bear markets, right? A trader might lose money in a bear market and hope to recover it during the bull run. Um, Being able to carry forward these losses would reduce the tax burden on the investors. So the government allows investors and shares to carry forward their losses, and crypto trading should have been given the same treatment. Correct me if I'm going wrong here, right? Then the 1%, which does impacts all exchanges in India, period, right? The 1%. Now, the 1% withholding on the entire transaction will make day trading, arbitrage trading, margin trading unfeasible, which may significantly impact order books and volume on crypto exchanges. This is a fact, it will happen eventually, making the markets illiquid and inefficient. This will happen. The other is, if I go more into it, the TDS deductions are one of the things you did mention about the 2 lakh 50. So all in all, it was, if I'm looking at from a, there are two perspectives over here, and I will fundamentally partition that. One is my position today, what we speak on behalf of WazirX, and one is as a trader. As an individual trader, it does affect my portfolio. As a company, as an institution who has weathered all the storm of ban, and when I say we is equal to not only WazirX but all the other exchanges, big or small in India, irrespective of the amount of revenue all of us makes. We have weathered the storm before. This is a great step in terms of sort of saying you are sort of legitimate in this country with or without the bill. But honestly, Preeti, honestly, Rohit, it does impact the businesses, and I mean, I have to say that. I mean, there's nothing hiding about it. But is there? We are deliberating right now, currently within the industry, in terms of what we have to say. How does it affect larger, smaller businesses in India? But because there's another aspect that you need to understand. A lot of other Web3 companies also depend on exchanges for liquidity. So what happens to the taxation of that, right? Stuff like that. So in a way, we're happy that this has happened. Legal, finally, one country in the world is saying, I mean, a major economy in the world is saying, yay, virtual digital assets. There is an industry. We accept that you guys exist legally. Next steps. But does it affect the company? Yes, on the TDS part. Does it affect the day trading community? Yes. So if you cut the liquidity, it does affect the business, right? I mean, exchanges run on simple buying and selling. So I leave it at that.
Yeah, absolutely. I totally hear you on that. I think that's a pretty large gap there, especially on losses. And when you're allowed to set off losses on any kind of capital asset, whatever it may be, a property, or it may be, equity shares, equity mutual funds, losses, you're able to claim some set off and in fact carry it forward. And none of that is allowed in case of virtual digital assets. That's going to be a big pain area. Rohit, please add to that. Like, what are your thoughts around this?
Yeah, I think, see, overall, actually, if you see, overall, I see two big things here which have to play out. I think one, Preeti kind of alluded to, which is a lot of young masses which are coming into this, right? And I'll touch upon that in a second. And the other is, how does the Indian state kind of take care, quote unquote, of its citizenry, right? That's the broader point here. The the if you see even like in GST, right, there are things that they consider to be quote unquote, better than par goods, right, which they will have at like, slightly lower than the average rate. And then there are things that they consider to be luxury goods and so on, right? So there's a little bit of a judgment the government forms on what is needed for the society, and through tax structure it is trying to guide consumption a certain way, right? So let's say, kind of, menstrual pads at like free or 5% or whatever, right? And you're having food in a restaurant with AC on at 28%, right? Now I think they are taking, that's the stance that the government is taking, right? That one is good and one is a luxury, right? Now you could argue that somebody sitting in a 45-degree weather, is it luxury for him, is it necessary for him, right? So but that's a stance the government has broadly taken, that there will be different sin goods and not, right? Now what will become more interesting is that they have broadly classified crypto trading in the sin bucket, if I can call it that, right? Like along with gambling and horse racing and whatnot, and lottery as probably the most benign form. Lottery is generally associated with like poor people, so people don't think of it as sin, but the treatment is the same, right? Now what I kind of am very curious to see how it plays out is, there was a set of people when traditionally the governments have been operating like Indians being or Indian masses being kind of not aware. Some guy will come and take their money, they don't know what equity is, they don't know what losses are. I mean, which is why we had like rules which are like, hey, loss making company, because they're like, are somebody will market, then this poor guy will take all of his hard earned money, will put it in something, and then this money will disappear, right? So that is the whole, I would say, the 90s, Harshad Mehta, all these kind of things, right? That's the baggage that they're carrying. Now they are, in front of a generation that is born on like 5 Mbps or more speed, right? This generation, as Preeti pointed out, is saying like, dude, what is this, right? I want to trade my money. How can you let me? How can you let me prevent it, right? So this generation is broadly saying, I don't want the state to take care of me, right? I know enough. I know as much as the guy in Estonia or the guy in US or the guy in Europe. Let me be at the same level of freedom. Otherwise, I can just go like virtually abroad, right? I can open things on a different exchange and so on and so forth, right? So I think this is a very interesting battle of a state that tries to prevent or protect its people, and a set of people who are saying, I don't need protection, right? I will margin trade, I will lose all my money. It's a highly volatile asset class, goes up like 400%, comes down 300%, but we don't need you, right? So it's a fundamental, and as we all know, crypto is a special asset class, right? In the sense that it attracts like what I call like capital anarchists, right? Like at some level, people who don't like fundamentally a system kind of forcing them to go a certain way. So there's a lot of philosophical, I would say, smart people over here who will push the envelope a lot more, and which is why I feel like what we have today done is purely a revenue measure, right? That there is large trading going on, let us make money while it is going on, and the philosophical debate on this is very very early, and genuinely, the I mean, when I hear some of the DAO and Web3 level like lectures and so on, right? It's such a different construct, as Aritra was kind of alluding to a little bit earlier. It's a fundamentally a different governance construct, right? Companies are forming here, and there are people who are saying there will be $100 billion worth of companies formed on this side, right? So I think the government also, in my opinion, will have to evolve. They will have to see what this means from a broader economic standpoint. Because if some, young, 16, 18, 20, 25-year-old kids, as we have seen in case of like, FTX and so on, right, like move to Bermuda, right? Like then I mean, sure, you are very smart in protecting, but everybody that you're protecting is kind of doing things outside, right? So I think that's just collect your taxes, be reasonable there, and let the kind of broader, I would say, third wave of internet kind of take place in India. I think I mean, that's my kind of personal opinion, and it remains to be seen how the government evolves along with it.
Right. Thanks a lot, Rohit. Yeah, I completely agree with you. I mean, there's one way they're looking at it is, let's just collect taxes, let's just tax it, and understanding will keep on evolving. But yeah, I think this is something that we all don't truly and fully understand. And there's going to be a certain amount of evolution that will take place on both the sides, from the government and the investors, and I think we have a long way to go on that front. But before we get into any kind of nitty gritties, I want to point out one aspect of the law where, interestingly, every time they talk about TDS or income, they always use the word transfer. They say whenever a virtual digital asset is transferred, and that's a very interesting connotation, because they don't call it sale and they don't call it purchase. They just call it a transfer, and that's actually a very wide kind of a phrase to use for transactions that happen. And interestingly, transfer of a capital asset is very well defined in the Income Tax Act, where they say when you sell a capital asset, you relinquish your right, or your it's kind of even in scenarios where we know about when the government is building metros, it does like this kind of forceful acquisition. So there are all kind of scenarios that they've imagined when it comes to capital assets. But when it comes to virtual digital assets, they've not gone ahead and defined what is the connotation for transfer. What does transfer really mean? And this is especially important because cryptocurrencies have these various kind of events, and like airdrops and forking and staking and all of that. And I think like even some of these are not so well known to me. So first I'm going to go to Aritra and request you to sort of elaborate on what are these events that could be common in India. What is all of this happening here? What do all of these entail, and do you feel that the law addresses these kind of situations well enough?
Well, not completely, as I initially mentioned, not completely, and I understand why. I mean, it will take some time for the policymakers on our side, on the private side, and the public side also to understand, because these are businesses being formed. I'll be honest, every week I see a new blockchain and I'm like, what is this new proof of what? I have not read this. Let me go through I spent 4 days on a new white paper, another white paper comes up. So I am telling you this, like, we are from the industry. I'm telling you that. Imagine the policymaker said, because crypto is just one of the items on the agenda in terms of taking care of a country, right? Now, you asked a very interesting question. This is something that is not only bothering us from a fundamental perspective, but a lot of other new companies that have just formed in the last few months. And I'll tell you where this goes. Now, see the 30% we talked about, right, which is on your the taxes payable on your profit, right, which is, I mean, sort of calculated after deducting the cost of acquisition. That could include the purchase price of the crypto or the gas and transaction fees. But what happens? I'll give you a couple of examples, simple examples. And I think some of your audience is into crypto, even not into crypto. One is staking. Like there are these staking platforms. Like you have a lot of companies allow you to stake. Like think of staking. Let's not go into the nitty gritties of blockchain. Staking is like I take some amount of my crypto portfolio, put it in this platform called Uniswap or Sushi Swap and all of that, and then you get a certain percentage of returns. Now there are weekly payouts, there are daily payouts, there are monthly payouts, and those are handsome lump sum numbers that you get in terms of payouts, right? Now, what happens to those? Like, how do you define those? I don't think staking has been fundamentally defined right now. The other thing, if I sell, the other thing is, we all know about IPOs, right? For the larger audience, or even if somebody is joining us for the first time who's doing a first course, think of it like how Zomato IPO, right? Similar context in the blockchain one, in the crypto world, you have something called ICO, and they also have something called IDOs, right? The ICOs are nothing. It's a similar where you give tokens. Like if Aritra is launching Aritra coin and my blockchain is supposed to be the fastest transaction per second blockchain, blah, blah, blah. And that is one fundamental financial technical value my blockchain is giving to the larger community. So companies can come build on that. Now for first time users and first time believers of my platform, I will give them coins in return. So that they buy equity in my company, and that equity buying in my companies happens through coins. Abhi, these things happen mostly on earlier ek zamane mein Telegram. It will happen on Telegram groups. Now it happens on Discord groups and all. You call Discord servers where you have individual groups. Now these are, so a certain section of the community gets this token. The initial people who back these companies, right? Now ICOs are one. Now how do you tax ICOs? All these things have happened over the years on, of course, because the laws did not exist, they were all happening on the digital front on these groups that people are giving on, right? Then you have airdrops. Now think of airdrop as like, there is a sale of my tokens today. I've decided I'll give X percentage of my tokens to the larger community, like that. That airdrop. Think of airdrop as like I'm just giving you something on Bluetooth. I'm just breaking it down. I'm not using
Yes, sure.
crypto terminology here. Who tracks that? How do you track that? And then, is there a way to track that? 120%. I can show you to track that. But that mechanism has to exist, and taxation for that has to also exist for that. If we're talking about the gamut of that, right? Now there is something called DAOs, decentralized organizations, which I think Rohit just uh, was talking about. Now DAOs are fascinating. Okay, DAOs are think of say. Uh, think of an organization without any hierarchical process, without a CEO, CTO, CPO, and all these terminologies and all of that. DAOs are basically communities. They build on a community, and everybody votes to decide what happens next, and they build on that. It's like some of it work on proof of work and stuff like that, right? Now within DAOs also there are a lot of tokens given out of that particular token, like coin. Like think of it like today Bitcoin was formed. Okay, Bitcoin is a DAO, for example, right? Now those coins are given away to the community on the staking platform. So what happens to taxation on that? Then
Yeah.
another area, NFTs. Now, NFTs are fascinating. Now I don't. Now let's not go by the images of I don't know, apes which are selling for millions of dollars, which I also sometimes little difficult for me to digest sometimes. Like, why didn't I create an ape?
Are you referring to that picture that was drawn by a kid? No,
Not-
a picture of an ape which recently got sold, right? Some
So
NFT of
he's
a
talking about the
monkey.
board ape,
Bored
the
ape.
board ape series.
Correct, correct. So now NFTs are fascinating. The underlying tech of NFTs, trust me, it's fascinating. There are companies in India, like don't allude and don't define NFTs. And since we're talking taxation, I'm going to describe this and put taxation into this. Now, what version of NFTs do we commercially know today? Oh, NFTs is one this GIF or something. It has got Aritra created this, and my price I have put it whatever couple of Ethereum, which is like whatever number of lakhs of rupees, and Preeti decides, this is great, I'll buy it, and you already have a good portfolio, and people will buy it from you. So you basically flip. That's called NFT flipping, right? Nobody's defined that. There has to be a layer of discussion within the government on that. Is flipping
Right.
is selling, reselling an item, right? Yeah. Then there is another thing. There are NFTs which people don't want to sell, like contracts, basically. Land. There are a lot of NFTs you just want to hold on to because it gives you that uniqueness, right? Simple. If you still don't understand NFTs, a lot of you in our community, simple. It just gives a unique code, which cannot be changed, which cannot be tampered with. It basically gives you ownership on code, which is fantastic. Nobody tampers with till the day you die. Now, what about this? I have minted an NFT and I don't want to sell it. What if I want to sell it after 2 years? You have these holding periods, right? If you sell it after so many months, you tax and stuff like that. What if I decide to do that? तो उसमें कौन सा tax लगेगा? Under what slab will it come under? So these are the things, because NFT is just not minting and selling. Lot of things are NFTs. Everything that you're doing are NFT. A brand launches something is like, if I decide to launch my smartphone before the actual physical smartphone, which I manufacture in say Thailand, and then put and then it comes to India, there is a tax I'm paying because it's entering a physical boundary, right? It's coming to India. But what about I'm a company over there who launches the NFT of the smartphone before the physical smartphone comes to India, and they try to selling that on the metaverse. So governance laws around that. So
Yeah.
the reason I'm saying that is it's fascinating, and it might be a little overboard, but it's happening right now. It's practical. These are laws in India. There are laws in Dubai. There are laws in Singapore, and these laws are defined on the basis of your boundaries and all. There is certain definition of a boundary of this is India, right? There is a certain definition of laws within the country. But what happens? The same thing is extrapolated in something called a virtual world. Brands have virtual. Brands are slowly getting into it.
Yeah, yeah, absolutely.
How do you
Yeah.
tax that? Who defines the
Yeah.
borders on that? So
Yeah.
there has to be deliberations on that. And I always believe, because everybody has told me all the way in my life, ki first technology comes, then taxation comes, then policy comes. I fail to believe that. If you actually explain to the lawmakers and the revenue folks, the
Right.
Department of Revenue, CBDT, this can happen. So these are the four different funnels, and I told you there is still not clarity on. So
Right. Wonderful. I think I learned quite a few things, and it's just so engrossing, this topic. There's always something to learn about it. And I agree that you point out that there are these various kinds of transfers that may not be fully captured by the law as it stands right now, and there's great need to do that because there are stuff happening around the world. And but right now I look at it as they want this industry to grow and evolve, and when it really is something, when it makes sense from you know collecting revenues and taxing people, then I guess they're going to wake up to it. But right now, what they've done is very interestingly to create a trail for people, for them to be taxed. They've brought in this concept of TDS. Now, TDS essentially is a mechanism for the government to just keep, leave, let loose their pan, our pan on whatever we do around the world, so that they know exactly what you're up to, what incomes you're earning, because somebody is supposed to deduct TDS. Now, interestingly, the law says that anyone who's responsible for paying to a resident a payment by way of a consideration. So it's very smartly worded in the sense that it could be anyone. So it does not say the buyer or the facilitator or whatever. It says anyone who's responsible for making a payment to a resident of a consideration towards transfer of a virtual digital asset and so on. Now, this could mean many things. Like it could say, for example, when we deal with sale of immovable property like a house, when you sell that house, the buyer is responsible for making a TDS deduction before making a payment to the seller. And then there's complicated compliance. The buyer has to file a form online, has to go and deposit tax with the government and make the payment to the seller net of tax. Now, this is the kind of thing that they have also imagined for crypto transactions to take place, but it's actually going to be very, very onerous, because we can't expect all buyers to just keep on doing these hundreds and thousands of TDS deductions and filing TDS forms. And what if there are mistakes? Like people, even enterprises make mistakes on their TDS submissions. So this could be like very, very onerous. And then you imagine that perhaps it's the exchanges who may have to get into something like this. So Rohit, like share with us, like what do you think are the various aspects and perspectives around this TDS and how we should truly understand it?
Yeah, so see again, my fundamental stance is that the government decided that they have certain playbooks that exist today, right? So they fundamentally recognize this has become too big to ignore, right? And it is too much to be able to parse out at such a fast speed, right? Like one year between like budgetary kind of movement, every year to year kind of takes long steps. So I think they decided they know enough to put this broadly in the category of gambling, right? And broadly, there has to be traceability, and therefore let us just kind of use our TDS playbook, which we have now refined, right? And let us just put it over there. And as some of the viewers may not be aware, but this is not just crypto, right? Like government is using TDS, TCS across a whole lot of places wherever they feel there are transactions which may not finally get tracked. Wherever they feel there's any risk of a transaction not getting fully tracked, they are putting TDS over there, right? Or TDS advanced tax, whatever you may call it, right? It's fundamentally at one level getting government a little bit of working capital early, right? At another level, creating a trail that now the seller now knows that, boss, this is now tracked, right? So in that sense, they have taken just this playbook and they have implemented it as is, right? Now, as you're rightly saying, right now, this is and it will become more and more interesting as things goes on, because as you know, right, like Bitcoin in a couple of jurisdictions globally has now become legal tender, right? So there's another question that people are asking, that what if like what is today a couple of small countries, what if like between this year and next year there are 15 countries that adopt Bitcoin as a legal tender, right? As does it become currency? If it's currency, then do you do TDS on currency deduction, right? So I think right now, as I see it, government said this has become too big. We don't want to kill it. We want to tax it. Let us do this. Let's move on. The whole world is changing so much in 1 year. By next year, there might be more clarity. इससे ज़्यादा तो we can't do anything, right? TDS of 1% कर देते हैं. उससे ज़्यादा, like, do we want to keep 10%? No. Do we want to keep 5%? Probably no. 1%, okay, low enough. Do we want to go in decimals? Probably not, right? 30%, does it seem like high enough? Like, can it go to 40%? Okay, that seems like an overkill. What about 15%? That seems like too low. So I think they've just taken some very, very broad things, and they've left it so open that theoretically all the conditions that Aritra was defining earlier, right? You could take a very, the government policy on that right now looks like relatively clear. Do you have a cost base? You don't have a cost base, then the cost base is zero, right? Whenever you're selling, whenever you're transferring, right? Selling price minus cost price, which is zero, times 30%, right? So I think while in our heads it can look like a lot of 55 different cases, right? The way government has defined today, it captures at least, like, broad cases quite well. You can call it harsh, but it captures it, right? So I think
Right.
and I don't think there is anything too much to be read into. See, because also I'll take another stance, right? See, fundamentally, blockchain, if you see, right, at a technology level, right, out of which, as we were mentioning, cryptocurrency or crypto, whatever you may call it, digital currencies are just one formulation of that, right? Fundamentally, blockchain helps kind of untrusted people do trustworthy transaction, right? Actually, as you if you think about it, right, in India these kind of technologies are deeply needed, right? When you are digitizing, when Mr. Modi is talking about every day about like the need to digitize, right, what does it eventually mean? Right, it means, a poor farmer that has a land, should be able to get it, and he doesn't need to have a physical file which he can keep in a locker, because now his mobile, like his bank account, is also on his phone, right? So he needs to have digital everything, and digital everything will happen on blockchain. There's nothing else which is more elegant than that, right? So in that sense, I feel fundamentally the government of India will take a stance that we need blockchain, and as a result, there may be this annoying little currency thing where people are making whatever, and kind of gains. Let's just tax that, but they will not kill it. I'm genuinely very hopeful they will not eventually kill it. There's very smart people in our policy and public domain, who will prevent this from getting killed.
Right. Yeah, I agree with you on that. Aritra, your word will be very important on this. Who do you think, has the onus of driving that TDS compliance?
I mean, that's still debatable. I mean, honestly speaking, I'm just not being politically correct over here to save myself. But we're still debating on that. But I mean, it's on both the sides. I mean, we are looking at it if it falls on the exchanges completely and we do it part of. If I just have if I look at it the way it is written, I think it falls on the onus is completely on the exchanges. But that we're still debating on that. But there is one more angle to it. The angle is, see, all of this data is on, there's something called on chain and off chain. Meaning blockchain may think of it like on chain is like on the blockchain, and off chain is like, say, you're basically your centralized servers and all of that, your regular Amazon AWSs of the world and all of that. Data, data sharing, we're doing data sharing with the government in us, right? There are a lot of compliance issues which comes up because of this. So that needs to be talked about, like this tedious filing, you file all these filing that will happen, that gives rises to a lot of good compliance issues which can be solved between all these exchanges, small, big, or whatever. And there are also international exchanges which have operations in India, right? They're registered as tech companies, say in North America or somewhere else, but they have operations in India, meaning they have a center in India which deals with Indian citizens' money, right? So what will happen to them? Those guys also need to come under the same jurisdiction. So as of now, the onus falls under us, but there are a lot of compliance issues which arises because of that, and that's for sure. Like all of this that will happen, that's an added cost. Who does that? How does the data get exchanged weekly, monthly? That's not clear right now. So that also happens. So yeah, that's there. The other thing I want to, if I can quickly point out, if that's okay, like one of the things I've always heard in India from the government, and not only in India, everywhere in the world, is, "Arey, this is gambling. This is like horse trading. Kya hai isme? There's no intelligence in this. What is this?" I kind of want to. I've said this in private discussions with probably every MP in this country, of most of the members in the PMO and RBI also. It's not gambling and horse trading at all. And I'm not saying it from an emotional standpoint. Or how do you call ourselves gambler? What do I go and tell my mom? My son works in the gambling company. No, it's not. I'll tell you why. There's a logic to that. Like, look at any of these coins. Now, one good thing, okay, I'll just take a tangent. One good thing that will happen because of this taxation is, lot of because there were no laws around taxation and the bill, lot of, and the openness of the technology and the open source nature of the technology, a lot of random coins were also being popping up, right? Coins which
Right.
have no fundamental value, and that's a fact. There are a lot of coins which have no fundamental value. Go open up coin market cap, I'll tell you some of these coins have zero market value. Why? I'm not saying I'm not saying because people are trading in it, because the underlying tech, some of them are just scams, man. Some of them are open scams, and that's a fact. I will not deny that, right? Sorry,
Oops. Okay.
I'm back.
I
Okay,
think we lost him for it. Yeah, you're back.
can you hear me?
Yes, go ahead.
Oh, somebody did not like my first comment, I guess, on scam. Sorry, I've heard somebody's.
No, that's perfectly all right, because even in stock exchanges, you have penny stocks, which have no underlying value, and there's all kinds of things that keep happening even on the stock market. So
Correct. Like, I mean, we can have a long discussion on penny stocks as well. But what I'm trying to allude you over here is everything started because of Bitcoin. Preeti, Rohit, and everybody who's hearing that. And I will tell that in as simple as what's possible. Dekho, when it started, when this entire revolution started with, and it is a revolution, all of this, all of this is based on a company which was formed by a bunch of people that nobody knows. Nobody knows who they are. Nobody knows why they did this. They did it for the larger cause. So the reason, and whatever reasons and whatever discussions happen in the early part of 2000 and early 90s, a lot of them were angry in terms of how things were happening in the mortgage crisis and how in terms of printing money and all of that. So that lot the motivations of that, why it happened and why crypto has happened, and motivations of what versions of crypto and blockchains you have today, little different. Smart contracts would not have happened just like that, right? There is somebody who realized that, oh, there is a tech like this, let me create another version of blockchain called Ethereum blockchain. And now what I will do, I will create smart contracts. So that, and smart contracts in a way change the way this industry works today. A lot of these companies exist because of them. Now, why I gave this description and this small history was most of these coins underneath where you look at Matic or Polygon, look at a Solana, look at a Hedera Hashgraph, all of them are what they're represented by coins on an exchange, digital coins. हम जो भी उसको बोलते चलो, we'll define it as assets today. The underlying thing is a proprietary. Underlying thing is a technology which solves internet technological problems, right? At the end of the day, all of this is a ledger. It's nothing but a ledger technology. It's nothing but a ledger. I mean, it's very easy to say it's a ledger, but some of the really smartest folks have done this. But it solves a lot of problems. Each of these companies and coins are the underlying thing is a company which solves a lot of these the financially the problems you have in the finance sector, the problems you have in the agriculture sector, the problems you have in the food distribution sector. There is a company who's working on that. The problems you can literally redo the way issues of land contracts that are there in this country because it's immutable. Nobody changes that because it's decentralized. Nobody comes and messes with that because it's consensus based, meaning three of us will have a consensus of what this is right and wrong, right? So there's no centralized entity. You remove that issues, and the coins represent all of them. This is not gambling. You invest, of course, because kuch laws hai nahi, people are doing. There are pump and dump schemes which have happened on groups, and वो तो stock market में भी होता है, happens across the world, right? So that way, I think the allusion towards horse trading and the lottery, I don't think technically it fits. Again, personal opinion. I'm okay. I'll be called out for this publicly, but this is what I always
that's
put
an
out.
absolutely fair point, and I think the only way, the only thing I feel about that, it may have been likened to, or some people actually trade in cryptos, you know like they would just gamble without truly understanding what the underlying technology is. And I think you made a very good point when you mentioned, there are coins which have no value, which don't have an underlying value, and it makes a lot of sense for investors to at least do some research, on what is the underlying technology and whether this coin has value, and not just go by social media tips and what they hear from on social media. I think it makes a lot more sense anyways, to truly understand what this is. And I think you also shared some very interesting insights as to how blockchain tech could be very useful for India. Rohit talked about it, and yeah, so I think that makes a lot of sense, and hopefully in some more time there will be a lot more understanding that will evolve. Before we close, I just want to hit upon one more aspect that was touched in the finance bill, which is when cryptos are gifted. So, very simplistically, they actually imagined a scenario where you may gift cryptos to somebody, and if that person is not related to you, and when I say a relative, I actually mean a relative within the confines of the Income Tax Act, where who is a relative has been defined, and it's usually your brother, sister, parent, wife, lineal ascendant, descendants, and stuff like that. So if anybody beyond that you make a gift of crypto, then it could be taxable for the recipient, and that happens when the value of the gift exceeds rupees 50,000. Then the entire value shall be taxable. Say for example, you transferred a coin which was worth 80,000 to somebody, you gifted it, and that person is not your relative, then the entire 80,000 will be taxable in the hands of the recipient. Now, this is also another complexity because some people are saying that transactions like airdrops could be classified as gifts. Therefore, recipients have to pay tax. And then again, the question arises as to what value they should use and how they should calculate, and tedious implications and all of that. So yeah, this is okay. Is my voice echoing still?
No,
No.
Priti, I can hear you clearly.
Okay, all right. Yeah, so I thought, it would be good to talk about this as well. Rohit, any comments on this and any closing thoughts, because we're almost at 5 o'clock, so we'll close it in a bit. But, any thoughts that you have on this? And then I'm going to come to Aritra to, what can we finally expect? What are you hoping? Will the government, will they budge from their position? So you think about it while I go to Rohit and, take his views on this.
Yeah, no specific views, Preeti, on the gifting and so on. I think they are treating this like any other gift, which is, I guess, like credible and good. And again, right, I would say, like, um, I think we should look at this in at parting level. Like, we should see this. We should not react too much right now. It is something which can get the whole thing can evolve as soon as, let's say, crypto bill comes out. They may define DVA a certain VDA a certain way, and that can change kind of the final implication. I also feel the global, they will keep pace with the. I think they are very smart people who understand that this is fundamentally a cross. This is natively a cross border product, right? That's how the genesis of this thing was, and there are a lot of people who will take a look at, as some of you may be aware, there's a proposal in the US. It's a bipartisan bill, which talks about a $200 limit on minimum limit on taxation gains, right? So if you made $50, you don't have to pay taxes on that and so on, right? So I think the materiality thresholds will go up. I think some sort of, over a longer period of time, some sort of cost and expense kind of basis will come in, and some sort of carry forward. I see slowly and steadily that those things will come in. How I see this is, it's a great first step. It's right now in a place where it'll find a bigger place in the crypto bill, and we should look at evolving. And I really hope the policymakers kind of continue to be supportive of fundamentally what is a new technological era. We know how difficult it is once you fall back. We've seen, like, 60s and 60 to 80s, like the whole world went into semiconductors. We stayed behind, and now, like, 30 years later, we are trying to catch up, and that's bloody hard. Right. So I hope, like, we keep pace on some of the newer things. That's the only thing I can just hope.
Right, wonderful. Aritra, any closing thoughts? And of course, are you hoping, expecting amendments, changes to the finance bill? Yeah, over to you.
What you want to say? uh, I mean, we are all waiting for the bill. I don't think there is still clarity on what the
I
actual
think
debit.
there's some problem with your sound again. Yeah,
Can you hear me? Is that okay? Okay, let's wait. Okay. So, yeah. Okay, I'll try. Or I'll rejoin in a minute if that's okay. I'll, I'll just rejoin in 10 seconds. That's okay. So that the voice.
that's what happens when you rely so much on technology. Okay.
Can you hear me?
Yeah, go ahead, please.
Perfect. See, this is why everything has to be in blockchain. Nothing against this platform, but yeah. Because it's a shameless plug that I'm doing. Okay, here's the thing. See, we have, and I'll break it down. Although the finance bill is there, the literature is there, it still needs to be made into a law and all of that. But there are a lot of deliberations, honestly, that still needs to happen on the finer aspects of what was defined under what is a virtual digital asset. One, B, in terms of the taxation and how it impacts. I'm sure the government will look at it. It's not the first time something like this has happened. I'm sure they will hear us out individually or through groups. That's two. Point number three. I think we're all waiting for the bill, and we have worked enough in the last 2 years with every department of the government in terms of defining the bill, what it is, and all of that. We have given every data from our side that was possible to the government, because bill is critical. Because see, as I said, the finance bill only encapsulates a part of this industry, which is okay. The largest amount of revenue was coming from this part of the world, which is the exchanges part of the world, right? But for the next 5 years, honestly, will be defined by exchanges plus there are decentralized exchanges, there are DAOs, there are NFT platforms, there are NFT marketplaces, right? All those other, there are companies which will just launch digitally on the metaverse, right? And this exists, right? So what happens to those guys? And those things also have to be included in this bill, because I'll tell you what is happening right now in the world. I'll give an example of the United States also. A lot of companies are moving out within US. A lot of companies that have gone to Miami and they're saying, boss, I'll move out to Dubai. Not just because of the taxation. They're all looking for governments who are open to talk to. We need to realize that it is no more a brain drain problem or tech problem or tax problem. This is an element of, this helps India also grow. Not only from the if you do the basic math, not only from the GDP perspective of contributions of these companies, but also look at the power play which happens. You know how many Indians went in the 70s and 80s? You know how many Indians have had a hand to play in the when the chipset revolution happened in the US and the commercial personal computing revolution happened. There are Indians who built that in Silicon Valley. I mean, I go on Twitter, figure these out. I can name a lot of people, but I don't want to. The same thing happened. I was talking to somebody's wife whose husband is really, really famous in the valley, who died recently, and she was telling me she faced a similar problem. She faced similar problem. She faced this. I'm getting a government bureaucrat call right now. I hope he was not hearing this, but she was facing a similar problem even in the 80s when they were trying to. There was discussions on some laws related to some part of the IT industry. All I'm saying is, let the 10 years and even taxation, blockchain has a massive impact of how taxation products are built, right? It is. There are a lot of, because of the taxation. I know companies were building crypto tax products in India. That's another interesting thing that is happening in India. All I'm saying is, let the next 10 years of products on crypto and blockchain build in India. Internet will be built in India. That makes India powerful. That makes India powerful within our neighbors, against our neighbors, across the world. Economy is also here. Jobs will also come over here. I know of so many Indian Americans and Americans who have shifted from America, shifted from Europe. They've come to Asia to build crypto companies. I can name a lot of people who have done that in the last 1 year in crypto, because Asian countries had somewhat favorable regulations. So it's happening. The choice is ours whether we want to do it. And my only appeal through your platform, and I keep doing this every time I go on social anywhere, is listen, this impacts all of us. This impacts your kids. It opens up the game field for all of us. So if you think you believe in crypto and blockchain, you don't believe in, chalega, no problem. Don't believe, you don't have to participate. If you do genuinely believe in crypto and blockchain the way it impacts this country, go talk to your local MP, go talk to the local politician who represents you, ask him questions so he or she can go and represent you in the parliament. It's a democracy. We have done that. We don't come from powerful families. We're normal people. We have gone to the government day in, day out for the last 3 years expecting change. So it'll happen eventually. But I hope there are some changes made in the taxation thing, and I hope a bill comes this year finally so that it helps all of us.
Right. Yeah, that's a wonderful note to close our discussion on. And yeah, I don't know how many of us will make that effort to go to our local MPs to talk about cryptos, because we have much bigger problems when we talk about roads and electricity. And I think we're still not there yet. But yeah, this is an absolutely very interesting topic, and I wish I could go on and on. And there's so much to learn and understand from each other. And on that note, actually, I just want to point out, Aritra, we are building a crypto taxation product. So yeah, yeah, we are on it. So yeah, we'll talk more about it, and we'll share more insights with all our listeners. So thank you so much for joining in, Rohit. Thanks for taking our time. Aritra, thank you so much, and we'll connect again hopefully sometime soon.
Absolutely.
Thanks a lot. Thanks a lot, everybody.
Bye.
Bye.